Hello traders, and welcome again to another lesson. So this is actually by far one of the most important lessons that you need to be aware of, because this is what will set you apart to succeed in this industry. You have to know exactly when not to engage in the markets. I know the perception is that you want to know how to engage or how to trade, but really, to be a professional trader, you need to know when not to trade, when the conditions are low probability. So in this lesson, I'm going to outline exactly the scenarios that are low probability. These are based on my experience, and I'm sharing it with you because this will really help you in overcoming what is ahead in terms of your trading career. So when not to trade? There are actually simply periods in the market that are very low probability that you must be aware of and avoid engaging altogether. So this is where you take notes and ensure that you capture and you backtest these periods, because I'm not just saying them, there are things that happen in the market. So you need to go back to the charts and look at these periods and backtest and journal how the market delivered versus the normal volatility, normal period in the markets. So the first thing is NFP week. NFP is the non-farm payroll. This is a news event that comes into the market with very high impact. It's also almost the same as the FOMC that I've outlined as the second event. But NFP, what you want to do during that week, because NFP usually comes in the first week of every month. So the last day you want to be trading is Wednesday of that week, New York session. Do not try and trade on Thursday and Friday of NFP week. So the second thing is during FOMC news release. So FOMC also has its own schedule. You can go into the economic calendar and look at the schedule where FOMC comes in. So during NFP news release, actually it comes in at 1400 p.m. New York time. So it's not even during the session we're trading, but you want to be very aware of it because the market tends to start consolidating prior to the news release. The third news release event you want to be aware of is the Fed chair. So Fed chair speaking is also a high impact news release that you want to be aware of, and you want to really avoid being in the markets during that period. The fourth is January and December months. So actually this is something you have to go to your charts and see it for yourself. We have, if you look at the daily chart especially, you'll see that during these 2 months you get a lot of consolidation and a lot of back and forth. So that back and forth is actually the market building orders for the year to come. So what happens if you're having a very tight consolidation in the daily chart? The trades you're taking in the lower time frames is very low probability. You want to see movement in the daily chart for you to be engaging. The fifth is June, July, and August summer months. So these periods also tend to have some form of consolidation or back and forth, but what you do, it's not as bad as December and January, but what you can do is reduce your risk, use minimum risk. You have bank holidays. So bank holidays in the economic calendar are also days that you can sometimes see a consolidation day coming up, especially if you get it on Monday, the worst day. Then finally you want to look, when you have immediately taken a losing trade, stop. You want to review that trade, you want to evaluate that trade, and then before you engage in any other trade, ensure that you understand what went wrong in that trade. Because there's always something that the trader, not the model or the trading plan, but the trader. It's always something about either the buyers, you got it wrong, or maybe you executed wrongly. Maybe you placed your stop in the wrong place. There's always something if you get a losing trade. So you want to review that trade and evaluate it before you take another one. So this is an example of a December holiday. So the market tends actually to enter into a consolidation program or period during, especially from mid-December towards the end of December. So that Christmas period, you do not even want to be in the markets. You can see how shallow the market is moving. This is the daily chart of EURUSD. This is not ideal compared to what it was doing here. So in this period it was moving, even after you can see it moving, but that period between mid-December towards January and even end of January, sometimes you get a lot of back and forth and shallow, really shallow movement in the market. Secondly, when you look at the June, July, August summer months, especially August, you will get a lot of consolidation also, and a lot of manipulations actually goes on in the markets. So you want to reduce your risk during this period. Use minimum risk. If you are risking a high of 1%, between 1%, 0.5%, and maybe a quarter of a percentage, then use a quarter of the percentage as your risk during this month. So this is an example of the NFP. So it usually comes in the first Friday of each month. So during this period, as I was outlining, this day, Wednesday, should have been the last day during New York. The last day to be trading is this day. So just ignore Thursday and Friday and just let it go. Maybe just study the charts, look at what it's doing, but do not engage. This is what happens when we have NFP news release. So if you're trying to enter here, or even if maybe you for some reason maybe you got the bias wrong and you thought the market was going higher, if you are tempted maybe to enter, maybe you had entered a sell or a buy rather, if you had entered a buy here and you placed your stop here, once this market comes, it actually happens in seconds. So this market, when it shoots below, if your stop is here, the broker will take you out here, which is you could even sometimes find is more than 20 pips more than the stop you placed. So that's why we're saying just avoid it. Oh, actually you can see before the news release of NFP, you will see a lot of consolidation happening. Even FOMC, a lot of consolidation usually happens during that period, just before the news release. So as an exercise, just go back to your charts, back test, and see for yourselves these low probability scenarios that I've indicated here. And you want to journal, because you want to remember these periods when you're doing your trading, and when you now formulate your trading plan, you want to include it in your trading plan as periods that are low probability and exactly what you need to do, just as I've outlined in this lesson. So thank you so much for watching. See you in the next lesson.